Well, I'm John Kreitler. Welcome to This Week in the Markets. On Wednesday, the Federal Reserve kept the Fed's funds rate at 5.5%. It also released a summary of economic projections, the dot plots. Dot plots show that by the end of this year, 2024, they're looking to cut rates 2 to 3 times. In 2025, they also signaled less rate cuts necessary, therefore probably a shorter, shallower rate cutting cycle. In prepared remarks and during questions and answers, Chair Powell acknowledged that the CPI reports the last few months were hotter than expected. But all else being equal and being data dependent, they are indeed looking to cut rates by the end of this year. Stock markets took this and went to all-time highs. Also interesting, the gold market went to all-time highs during the session, possibly taking heed of the idea of being patient with inflation. One thing that I have my eye on are other central banks. The Bank of Japan this week went to zero for their target from negative interest rates, therefore eliminating the last major central bank with negative interest rates. A few hours ago, the Swiss National Bank actually cut rates, the first major central bank to do so. It'll be interesting to see for the remainder of this year if there's more of a coordinated effort among central banks to fight inflation, whether to try and bring it up in the case of Japan or to bring it down in the case of Europe or the United States, or if each central bank will go it alone. That remains to be seen. I'm John Kreitler. This was This Week in the Markets. Have a great week.